This is Robert Kraft, and I'm coming to you live on this SNN Live, and we're at the New Orleans Investment Conference 2018. And with me right now is the host of the New Orleans Investment Conference, Mr. Brien Lundin, who's also the editor of Gold Newsletter. Brien, welcome back to SNN Live, and thank you again for having us.
Great to be here. Thank you so much.
Thank you, and again, another great show. And I think this is actually now our 9th or 10th year here. So again, every year we're so thankful to be here.
Well, I'm glad you're here. It's my 33rd, I think, year, so it's a wonderful event. I have to say so myself, and you guys have become a fixture here. Great to have you.
Absolutely. So, let's do a quick recap. I know we're only on day 3, but, a lot has gone on already, and there's still more to come. So what's been the vibe so far at this year's event?
Well, it seems like everybody's very happy, very intent, very engaged. We've had a number of great speakers so far. We've had our economic panel, we've had our mining share panel, our precious metals panel. We've given a lot of specific recommendations to the audience, a lot of big picture views and predictions and strategies. Everybody seems to be absolutely ecstatic, and we're not even really halfway through because we have all of today and all of tomorrow, and the energy just keeps building and building.
So, another thing, you are the editor of Gold Newsletter, and I'd be remiss if I didn't ask you some high level what's going on in commodities markets, but we are sector agnostic. So for those who may not follow mining resources as closely as you or some of the other speakers here, what's been going on in, let's say, the last year since we were last here in New Orleans?
Sure. Well, gold, going back a little further, bottomed or came off a long bear market in December of 2015, very late in 2015. And it recovered, had a nice run through 2016 and 2017. This year it's been a bit choppy back and forth, and we took a downturn in the summer, and now we're coming off of that. What's very interesting right now is that as we've seen some really steep sell-offs in the broader stock market, we've seen gold go up. We've seen days when the stock market has gone up and gold has gone up. And we've seen the dollar go up and down, and gold kind of disregard that and rise. So the bottom line is that investors are looking for reasons to buy gold rather than, as we saw early in the summer, reasons to sell it. There's been a fundamental shift in sentiment, in my opinion, a bullish shift in sentiment, and I think that bodes well for the near term. The thing about gold is the near term is what's most uncertain for it. We don't know what's going to happen tomorrow and next week. We do know with a fairly high level of confidence that given our debt issues, not only in the U.S. but in every developed economy in the world, that fiat currencies, the dollar, the euro, have to be devalued to lessen the impact and the size of those debts, especially in an era of rising interest rates. That means that all those currencies are devaluing, but they can't devalue against each other because they're all racing to the bottom of the hill. That leaves gold as the best standard against which they can devalue gold and silver.
So, there's a lot of different types of commodities here, different types of companies that are looking and exploring, developing different types of projects, looking for certain commodities. So other than gold and silver, what other commodities have you seen as interesting to be looking at?
Yeah, I would say two. Copper looks like it's going to have some supply-demand constrictions, some supply coming off the market. We're very positive on copper right now. Uranium, we're saying that all of the analysts here kind of agree that uranium is going to be the big winner over the next year. Unfortunately, we've been saying that for the last 5 years. But right now, as we speak, the uranium price is recovering. And the last time we had and the fundamentals are great for that, by the way. Supply is coming off, demand is rising steadily. And the last time we had a big run in uranium, about 7 or 8 years ago, there were maybe 400 or 500 junior uranium companies out there trying to capitalize on that trend. Now there's probably about a dozen or so that really demand your attention. So all of that money on the next run up in uranium is going to be focused on those few companies. So I think some well-placed, longer money with a longer term view that gets in some of these uranium companies around these levels is going to be richly rewarded.
So one thing I've always thought about when it comes to the commodities and mining business is that the idea of the time value of money and timing really is something that you really have to think about when it comes to when you want to take a position. Because we've done a number of interviews with many analysts and newsletter writers over the years. And, some are always like, all right, now's the time. Here's when it's going to go up, and then it might go down. So what's your comment on that in terms of trying to figure out the right timing as an investor to get involved?
Yeah, the timing doesn't have to be as specific, and then what you need to look at for commodities is more, I'd like to say valuation, but it's more of the cycle because it's hard to value one against the other or value it against its previous highs or lows. But you can get a feeling if you're a contrarian and you really study the markets. First, you have to understand that commodities run in cycles. It's highly cyclical. You have to have a sense of when that is bottoming. And you can do that through technicals, you can do that some fundamental analysis, but you can generally get a sense of when it's bottoming and just start accumulating at those bottoms. The hurdle there is your emotions. It's hard to buy at the bottom. It's tough to sell at the top. But if you can play those cycles that tend to really destroy investors if they let their emotions run. If you learn how to play them, you can play them to your advantage and really leverage your returns. So the timing doesn't come into play that much, the time value of money doesn't come into play that much because the returns in these sectors can be so spectacular if you get in at the bottom that you can wait a year or two. Before you really get those runs, and then there are ways to leverage those returns through, really quality mining stocks and junior mining stocks.
So not to date you or anything, I know you've been through a couple cycles now, just a couple, and I'm curious now, where are we at in the cycle? And then, for 2019, where do you see us going?
We are at a general low in the cycle for gold and precious metals. We very recently, literally in the couple of weeks before this conference, have started to come off of those lows and the seasonal lows of the summer. So I'm very positive in the near term for gold. I think it's a great time to get involved in the sector. Particularly because a lot of the equities, a lot of the mining stocks that can offer leverage to the sector are still trading at very low levels. So it's a great time to accumulate those either in a basket through an index or an ETF, or coming and doing your homework and talking to companies directly.
And another question I have to ask, because usually people see commodities and gold as a protection against chaos and things happening around the world. So I have to ask, in your opinion, what do you see as that black swan event that might eventually send commodities prices higher?
Well, gold is widely perceived as a safe haven against chaos, and it really isn't. That's the first myth that needs to be dispelled. You should not invest in gold as a hedge against any geopolitical chaos. What gold is a hedge, it's a protector, it's insurance against an inevitability of currency depreciation over the long term. Sometimes that goes more quickly, then sometimes it goes more slowly. I think we're entering an era where it's going to go a bit more quickly. The Fed has been tapering, it's been raising rates. I think the black swan, which I don't think is I think it's a pretty white swan, I think it's pretty inevitable, that sometime next year the Fed is actually going to halt its rate hike campaign. It has to. The higher interest rates make the burden on the national debt, on the federal debt, unmanageable. Very quickly, if we get up to anything near, or we get to higher than 3.5% of the Fed funds rate, our effective rate on the federal debt is going to be somewhere around 6 or 7%, or about $1 trillion a year. That's politically impossible. So for a number of reasons, the Fed will probably end their rate hike campaign next year, possibly by mid-year. Once the market is confident or gains awareness of that fact, you're going to see gold prices really take off.
And where can our audience go and find more information about Gold Newsletter, and then to also find out more information about the 2019 event?
Well, NewOrleansConference.com and GoldNewsletter.com. Very easy.
My name is Robert Kraft, and I'm coming to you live on SNN Live, and we're at the New Orleans Investment Conference 2018. With me again is the host of the New Orleans Investment Conference and editor of Gold Newsletter, Brien Lundin. Brien, thank you again for having us.
Thank you. Great to be with you.